Welcome to this installment of our Industry Leadership Series. I'm Brian Dobson, Head of SPAC and Disruptive Technology Equity Research at Chardan Capital Markets. As always, I'll start this call on an interesting note with some important disclosures. During this call, we will not be discussing Chardan research. Any discussions about research should be coordinated between a participant and their respective salesperson. Our compliance team has asked me to read the following statement for the investor call. By participating in this call, our speakers attest that they have made Chardan aware of any potential conflicts, and they will not discuss any material, non-public, or confidential information that they are aware of that may breach their legal, regulatory, or fiduciary responsibilities to any parties. So with the disclosures out of the way, it's my pleasure to host LiCycle, an industry in lithium-ion battery source recovery, lithium-ion battery recycler in North America. We recently launched coverage of the company, and our research is available upon request. With me today is Ajay Kochhar, President and CEO, who, with Tim Johnston, Executive Chairman, founded LiCycle in 2016. As a chemical engineer, Ajay's depth of expertise in the battery materials industry derives from his extensive technology and product development roles for leading global engineering firms. He has overseen multiple global projects pertaining to clean tech development in the lithium, cobalt, nickel, and rare earth metal industries. Ajay, thank you for joining us this morning. And we look forward to hearing about your company and seeing your presentation.
Thanks very much, Brian, and great to be here and pleasure to be on for this webinar. So before we get into Q&A, I'm going to start with a presentation and some formal remarks. And from a highest level, and maybe I'll just start here with a bit of a story about who we are. And I turn to slide 4. This is a snapshot about the genesis of LiCycle and our founding. So as mentioned by Brian, background really here is, two technical co-founders, chemical engineer personally, Tim's a mechanical engineer, and we really come from the lithium industry. So you heard there about our background in building these projects with a big focus on lithium. And really those are, just to help put it in context, those are really lithium chemicals that go into lithium-ion battery cathodes that then go into battery cells and then into modules, packs, and EVs. So way other end of the food chain, but these days a very, very pertinent and very important part of the supply chain. So that's our background. We left that in 2016 because for us, we didn't see what we would consider a truly sustainable long-term solution to recycle lithium-ion batteries. For us, sustainability is the triple bottom line of people, planet, as well as profit. So it has to be sustainable from an economic perspective. And hence we left our careers to start this company back in 2016. Fast forward to today, we've successfully developed and are commercializing, and we're a commercial business, our IP protected spoke and hub technologies. I'll talk about that. Really should think about this as urban mining. So the production of these same critical materials from an urban source or from above ground sources. And we're in a fantastic position in terms of where we're at. We have, as of the last fiscal quarter, end of July, $650 million of cash on hand. And we're really very focused right now on execution. So that's the high level. And if you want to turn to slide 5, we'll get in here to a little bit more depth. So just let me touch a little bit on our growth strategy and how exactly we're moving forward with execution. And as I go through here, I'll talk about what exactly we do, how is it advantaged, and what the technology is. But at a high level, we are prioritizing investments in North America and Europe in terms of assets in the ground, but at the same time, maintaining very strong connectivity with Asia. APAC, or Asia Pacific, is really the epicenter of the battery industry. At the same time, those companies are building out in North America and in Europe. But there's tremendous growth here domestically in North America and also Europe. So that's our focus geographically. We are agnostic to the type of lithium-ion batteries that we take. Lithium-ion is truly a family of material. It is, different chemistries, different form factors, different applications. It's a very broad spectrum. And one of our key differentiators and abilities is to take that full aperture of material. And of course, the main benefit here, and you think about megatrends in the world, is really providing a local solution for the supply and production of critical materials alongside a great recycling solution. And that is where our industry, our customers are going, right? Everything these days is about supply chain disruption, localization. In fact, that's our business model. And that's been our business model to localize supply chain since day one. Just so happens now we are fortuitously at the epicenter of a lot of these megatrends, whether it be EVs, batteries, ESG and sustainability, and the domestic production of critical materials. So let's turn to slide 6. We'll talk here a little bit about the demand that we're helping to fulfill and why are we, growing at the pace that we are. So on the left here, you have a bit of a view in North America and Europe of mega factory growth in terms of the amount of production of lithium-ion batteries. As you can see here, this is poised to rise over 16 times between current timeframe in 2025. So that is tremendous growth. And alongside that comes, if you look on the right, an estimate of, how much material is actually there to be recycled? Common question, and I'm sure we'll get into this in the Q&A. People say, hey, EVs are just going on the road, batteries are just being made. Where does your material come to be recycled? Well, a large part of the first wave at base loading of our growth is actually manufacturing rejects or scrap. So as you make batteries, it's not perfect. You have offcuts, things are cut to size, there's quality rejects. And especially in the ramp-up years of facilities, that can be quite significant from a volumetric perspective, just considering how much growth there is and how many batteries are being made. So that is actually the first significant driver of growth now and in the near and medium term, before you have that proverbial tsunami or wall of batteries that will come from end of life. So that's what you're seeing here on the right is really that 5 times or more than 5 times estimated growth in batteries available for recycling. It is really growing in lockstep with the proliferation of mega factories, with the proliferation of the making of EV batteries and lithium-ion batteries writ large. And if you turn to slide 7, there's another element, of course, to this, which is that I've been touching on. It's really about solving the issue for recycling, but also, domestic production and supply of critical materials. And what these charts are showing on the left, this is where primary, meaning mining supply of materials, is really coming from, these days. And you see quite a diverse set of geographies for lithium, nickel, cobalt. And even more importantly, in some ways, as it comes to where those materials go, on the right, you see where those mined sources or concentrated sources are being processed. You see a big theme here, a very dark blue prominence around Asia and specifically China. And that is, of course, what's been a massive focus to try and localize all parts of that supply chain. It's not just about EVs manufacturing. It's not just about batteries. It's also about how do you get those critical materials to be domestically produced. When you turn to slide 8, we'll talk here a little bit about a very encouraging step, and this is very topical these days in terms of the U.S. public policy initiatives to be and step out to be a leader in this space. And there are a variety of programs here. I'm sure in the Q&A we're going to talk about this in more depth. But really the focus here is to localize EV battery production. And again, it's not just about 1 or 2 steps of the supply chain. It's about the full system ultimately, because that's what we need to be localized and truly more immune to supply chain disruptions and potential geopolitical related disruptions. For the battery recycling industry, this is extremely exciting. This has both direct and indirect benefits. I'll talk about this in the Q&A. And as LiCycle, this is an example of how we're very well positioned because of our early mover, patent protected, and strength on the commercial side. Having been going now for many years, dating back to 2016 when people thought this wasn't really a smart industry to get involved with because it seemed too far off. Well, we're reaping those benefits now from having spent all those years in R&D, scale up, and now into commercial operations. If you turn to slide 9, we're now going to get into a little bit more about LiCycle specifically. So let me explain what do I mean by spoke and hub? What is exactly the core of LiCycle? So people are familiar, I'm sure, with a hub and spoke. That's a forward logistics system. Spoke and hub, why we call it that, is actually it's a reverse logistics system. So what does that mean? Batteries that need to be recycled are everywhere, right? So battery manufacturing is getting sited locally in North America, Europe. As those batteries get used, they're in the economy. It follows population as well as EV penetration. And one of the main issues for our customers, being auto and battery manufacturers, is trying to minimize that transportation distance, environmental footprint, and potential liability, given lithium-ion batteries are not just scrap metal, to therefore try and have a facility close by. We heard this 4 or 5 years ago. It actually split off our technology to be, spokes, which are regional mechanical processing, and then a centralized hub where we take intermediate product from the spokes and go back into battery grade materials again. The benefit of this is we bring down that transportation risk and cost for our customers, and at the same time get centralized economies of scale for the hub. The spokes are mechanical processing, and the hub is wet chemistry. The technical term for that is hydrometallurgy. This is patent protected, developed by us, and we have a strong moat around it, which I'm sure we'll talk about in the Q&A. But alongside, we also have very strong strategic partners, and we'll talk about this in a few slides as well. LG, one of the largest EV battery makers in the world, is an investor in LiCycle. We have a strategic both input and offtake agreement with them. Glencore, another important strategic investor in LiCycle, an even broader set of agreements. We'll talk about that in the Q&A. So these are the 2 areas of strength for LiCycle: technology and commercial strength. If you want to turn to slide 10, we'll dive into that a little bit deeper. And this is really what I was just referring to. So you have both technology as a key pillar of value for LiCycle and as a driver, and commercial. You can't have a strong business in this space and a long-term competitive advantage without truly differentiated technology along the lines of scalability, safety, environmental performance, and importantly, economics. So ultimately being profitable on an end-to-end basis. But you can't do that if you don't have the intake and the battery supply relationships and the offtake where that material is going to go to actually commercialize and valorize that model. So we bring both of those aspects together. Numerous parties in this space, even those that are coming, they're trying to potentially get up the curve on those aspects, but it takes time. And that's one of the big advantages of where LiCycle is positioned. Going to turn to page 11. So really the question here, and a very rational question, is how do you make money, right? What is the business model here for the business? So the main intermediate product of the spokes is something called black mass. Black mass is the cathode anode material within the battery. The cathode is where you have your lithium, for sure, it's always lithium there, with potentially nickel, cobalt, other critical materials. So that's what we're after from the spokes. We have 4 operating spokes today, generating that material. And as an interim business model till now, we've sold that material. Think of it like the dough to the pizza, or a partially, formed product. And that's been okay, as a good model to get churn in the system and realize the growth that we continue to execute on. But really, you should think about LiCycle as a sustainable battery materials company. And that is what's being seen here on the right. As we go from black mass to processing that through our hub and making lithium, nickel, cobalt chemicals, there is a significant value uplift that can be realized there, at least 3 to 5 times these days with the way lithium pricing is going. In fact, it's much more than that. So that is the full model, is basically taking in an aperture of batteries on the way in, processing those through our spokes, getting into black mass, processing that through our hub, and ultimately selling the lithium, the nickel, the cobalt, and making the margin with the spread in between. And this is very needed here domestically in the US, our Rochester hub. And if you turn to page 11, will be the first facility of its kind with significant sourcing of recycled lithium in the Western world, between North America and Europe, producing lithium carbonate, nickel sulfate, and cobalt sulfate. So this is very important from all those strategic domestic supply topics, but also from a financial perspective and a key inflection point for LiCycle. And that's really what you're seeing here on page 11. I referred to our operating existing spokes. This is commercial technology. We are the only company with the footprint that we have between Canada, various regions of the US, and also facilities coming in Europe with Norway and Germany, and more to come, in terms of North America. So that's very advantageous for us. And the Rochester hub, of course, is the key value driver, as I was just articulating, for the business. We turn to page 13. As you think about, what are really our competitive advantages here then? Okay, so premise is spoken at technology, strength on technology, strength on commercial. Diving a bit deeper, we are, again, commercially operational with our spokes. These are some photos from our Arizona facility. We just recently opened a fourth facility in Alabama. So to summarize, at this end, and people often, I think, downplay this, or they don't realize this is actually really important. If you don't do this step well, it's going to affect the full system, both spoke and hub. So here we're agnostic to the type of batteries that we take. It's a massive advantage in terms of chemistry. We also are the only business in this industry that can take full packs and shred them whole. That may sound like a very specific thing, but the advantage there is that form factors of battery packs is getting bigger and bigger, and they're getting harder to dismantle. And we're seeing this on the market. You may even have damaged packs, packs that have been in recalls. Maybe you can't dismantle them. Maybe they've been in a hurricane, right? So this is a strong advantage for us, and it actually opens that aperture even further and differentiates our offering. These facilities don't produce any wastewater and have minimal emissions, hence they're very easy to permit for us. And that is very different than pyro high temperature technology, which is one of the incumbent technologies. So that is a strong advantage for us. And as mentioned, the whole model here is to get these spokes close to where batteries are. So we have that footprint now, and we're leveraging that to really gain further commercial strength. If you turn to page 14, we'll change gears here to the hub. And this is, I'd say, a key value driver for LiCycle. What you see here is a whole bunch of data points around what this facility will do. We are in the midst of construction. We are fully permitted for this facility. For a sense of scale, the amount of materials we're going to be taking and producing is about equal to 225,000 electric vehicles. And the three key products are lithium carbonate, nickel sulfate, and cobalt sulfate. These are the salts, or the chemicals, that go into making battery cathode precursors and cathodes, to then go into cells, to then go into EVs and packs within the EVs. So this is very important. We'll be the first new, and expect to be the first new significant source of lithium carbonate, actually, in the United States, whether from primary mining or recycled source, and the largest new recycled source of lithium carbonate in the Western world. So it's very exciting in terms of what it's going to do for the business. And we continue to execute with laser focus on the Rochester hub, and is a key value driver of the business. Turn to slide 15, and we're nearing the end here. Of course, you bring this all together, you say, okay, strong technology, patent protected, commercialized, being built on the hub end, with strong commercial relationships, banner strategic commercial partners, whether it's LG, Glencore, as well as I did mention, Coke, strategic platforms. So all this comes together, of course, with the backing of strong financial positioning. We had, at the end of July, which is our fiscal Q3, $650 million of cash on hand. Our current project pipeline, which you saw on one of the previous slides, that is funded through that cash on hand, which is a great position to be in. But of course, there's additional growth in this industry. Despite the macro, we see strong secular trends in this industry, and the need to continue to be thoughtful, but also keep up with customer need. So we continue to evaluate a variety of particularly debt-based alternatives, whether it be from private or public, meaning government-related sources, and we'll continue to do that as we execute on the core and current project pipeline. So turn to slide 16, I'll close out here. In summary, LiCycle is at the epicenter of very strong secular trends, whether it be the EV revolution, ESG and sustainability, and importantly, the domestic supply of critical materials. We are in a fortunate position to have a first mover advantage, underpinned by very strong technology, our patent protected spoke and hub technology, and very strong commercial contracts, which drive the intake and the offtake of our business. And to augment that, we have world-class strategic partners. As mentioned, the Rochester hub, which we're executing, is on track to start commissioning next year in calendar 2023, is a key value driver of the business. And to back this all up, we have the cash on hand to make the plan happen, and we continue to evaluate additional alternatives, particularly around debt, whether it can be private or public government-based alternatives for future potential growth as we continue to be positioned in this very exciting and fast-paced growth market. So thanks very much. That concludes my remarks. I'm going to turn it back to Brian, and I think we'll launch into Q&A.
Yeah, great. Thanks for that overview. I think it's very helpful, particularly for investors who are ramping up coverage of the name. So let's jump right into the Q&A. First, let's talk a little bit about that spoke and hub technology. How would you describe that? And further, how does it differentiate you from your competition? Do you believe that there's a technology moat around the business?
Yeah. So in summary, and I've already put a headline on it, I think sometimes people try to find like a silver bullet as one thing that differentiates. It's actually a layered approach. So there are many things here that really differentiate and provide a moat around our technology. Let me break it into briefly both the spoke and the hub. And from a competitive perspective, I think when people see this industry, it often gets grouped in as recycling. In actuality, there's pre-processing, which is batteries to black mass and intermediate product, and then post-processing, so that black mass to finished good. And there are different players and different efforts along both those. So we do both. That's our spoke and hub. So on the spoke side, I touched on a few of the differentiators. Look, I think here a key set of aspects, I touched on 4 key pillars. Safety is really important. So being able to deal with batteries in a way that doesn't require a lot of dismantling, human interface. So our fact that we can shred full battery packs is a very strong differentiator. Scalability. We have the largest facilities of their kind doing this in the United States that are operating today. And that's going to be really important. We look at the growth coming. This is just the tip of the iceberg. So it's very important that we can be scalable. There are a lot of competitive approaches in this market that may not be along that lane. Environmental, beneficial positioning. We have to be actually better at the environment. So one of the incumbent approaches that's common is to actually throw batteries or materials into a furnace. That generates more emissions. It actually generates forever chemicals, fluorine emissions. People are reading about these more and more. They get into our bodies. They're harmful. And the government is clamping down on that from a permitting perspective. So that's great from a customer standpoint, that we don't generate any wastewater. We're not a thermal operation made to do anything with combustion, but it's also great for permitting. So it means we can actually permit faster and get these facilities out there. And lastly, through higher recovery, lower cost, it's driving greater ultimate profitability, right? And that's on the full cycle basis of our spoke and our hub. Those 4 same things I just mentioned apply to the hub as well, right? It's always the same lens and look at things through. In brief on that side, I'll say this and I'll pause. Look, I think here a key differentiator is going to be lithium recovery. We've seen lithium prices, of course, go through a very bullish cycle. They're not seeming to come down. And from our perspective, there's a structural short on lithium. So our ability to take batteries, get black mass, and actually recover lithium is going to be an important differentiator of what we do now and in the future.
Yeah, thank you for that color. Let's talk a little bit about your spoke and hub build out. Can you explain the strategy of the rollout? And what's your expansion opportunity for growth, both in the United States and in Europe?
Yeah, so we've taken this approach of building out the spokes in lockstep with customer demand. We have great commercial partners, as I mentioned, LG is an investor and also commercial partners. So as they're building factories or have factories that produce scrap, those offcuts I was mentioning, that is a key input to us. And we can get going, deploy these facilities, they're relatively low capital costs, make black mass, and get that line of sight to the feed that we need for the hub. So that's why we did it the way that we did all those years back. And then once we had that confidence, okay, there's line of sight here to fill the hub, we green-lighted that facility. And it does take time, right? It's been, by the time we'll be into commissioning, it would have been about 4 or 5 years of development to get there. So that's our growth strategy. That's what we're following today. We have this network of spokes in North America. And of course, we're also building in Europe. In terms of additional growth beyond that, and of course, there's a lot of growth to come just through that core pipeline. We're looking at a variety of options. And I'd say, as I touched on there in my remarks, from a secular perspective, we don't see this slowing down. It continues to speed up. So the opportunity set continues to grow. I'll give you one example of a way that we're embedding flexibility for future potential growth in the business. And I don't think a lot of people realize this. Our facilities on the spoke side, and this is public, it's in our permit documents, are actually permitted for a much higher throughput. And we have additional space in those facilities to actually add second lines. So that's not something we've committed to. It's not something that we're doing. That's not what I'm saying. But I'm just saying as an option for future growth in a capital and operating efficient way, that's a great way to potentially add future capacity. So we are always thinking about that future state in mind. It's not just about the core pipeline and how to embed flexibility into the system to be, again, efficient capital-wise and also from an operating cost perspective.
Excellent. And at this point, I'd like to remind the audience, you can submit questions by emailing them directly to me. That's bdobson@chardan.com. So let's switch gears a little bit and focus on your commercial partnerships. They're strategic and impressive with Coke, LG, and Glencore. Can you discuss, I suppose, how you view the significance of each arrangement and also how those arrangements might work together?
Totally. So let's start with Glencore, then we'll go to LG and then Coke. So we announced the Glencore transaction back originally in May, and then it closed in June. This is a comprehensive global partner for us. And I'll just maybe dissect here the rationale. I think, to be frank, it's probably a little underappreciated, the importance that this has for the business, and it'll continue to be shown over time. So let me do my best here to explain it. So when we interact with our OEM, meaning vehicle manufacturing customers, or whether it be battery manufacturing customers, they're faced with a very strong challenge around recycling, but also critical material supply. We acknowledge, of course, recycling is an important augment to primary, meaning mine supply, but we can't get there if we don't get the material out of the earth, in a clean and good provenance way. And then, of course, recycling helping to augment and over time becoming the majority. So this is really a position to say, hey, here's a solution. Okay, Glencore is the largest producer of cobalt in the world, top 3 producer of class 1 nickel, which is what goes into batteries. And that's a great potential solution, right? To OEMs say, okay, if you need both recycling and critical material supply, here's a joint offering. We're independent companies, right? But here's a joint offering that can help to solve that. And that was really the genesis of the deal. It has many aspects really quickly. It covers everything from intake to offtake. So intake, where we can work together, as just mentioned, on battery supply, black mass, offtake ability, both for our key products, particularly outside North America for our new facilities that may come, as well as byproducts. And I think that's a key de-risking element for this. People probably don't appreciate that. We generate byproducts. Any of these facilities will generate byproducts. We want them to go back to the economy. And so this provides us with clear offtake, clear, secure paths for that. So that all came with a $200 million investment, which was done back in June. So very strategic, great partner, and we'll continue to see how that plays out over time. Quickly on LG and then Coke. LG, as I mentioned, one of the largest battery makers, EV battery makers in the world. We had a deal with them that included both intake and offtake aspects. So taking in material and then returning, particularly nickel sulfate to them. And that's a true closing the loop agreement. And it was coupled with a $50 million equity investment. So very strong positioning and validation for the business. They did tons of diligence like all these groups did. And then lastly, Koch Strategic Platforms. They've been very active in the energy transition and transformation space. They did a $100 million investment with us back in the fall of 2021. And with them, we get the optionality to work with them on additional horsepower for engineering, execution, rollout, whether it be for our spokes and our hub. So that's a lot, Brian. I hope that helps to answer the role and how they all fit together of the different strategic partners.
No, that's great color. I guess in speaking to your production capabilities, what's your strategy for black mass production? And can you comment on the supply and demand dynamics that are driving that segment of the business?
Totally. So this is what I was alluding to a little bit in my opening remarks around how people should think about our business. And it comes to how do you value us, ultimately, and think about LiCycle. So look, our main focus all along has been getting to those battery grade materials. So lithium carbonate, nickel sulfate, cobalt sulfate. That's what we're building at the Rochester hub in New York, which is fully permitted. We're well underway with construction. And to get there, we do need to make this intermediate black mass material. We have these 7 spokes that are part of the core pipeline. To make that material, 4 of them are operating today. And that's great, because that basically then gives you the base load to say, okay, once we run our hub, we'll have that input to make sure we can have consistent input in operations. So that's what people should think about us. Black mass is really a means to an end. And while we were in this interim period, we said, okay, this is some years ago. It's less pertinent today, but we chose to sell it as an intermediate. When you sell it, you get value for nickel and cobalt, but you don't get value for lithium, because where it goes, lithium actually isn't recovered. And that's one of the key differentiators, as I mentioned, of our hub. And what we've seen is, because of this massive growth in lithium prices from April, May of 2021 to now, it's been about a 7 to 8 times growth. The value of the actual material that can be recovered from lithium-ion batteries and black mass has shifted. Today, 2/3 of that value is actually in lithium, and 1/3 approximately is about in nickel and cobalt. If I were to rewind a year ago, people that may have talked to us before, we'd say it's about a third, like equal among them, but it's shifted drastically. And last point of this, I would just say, if I go back to when we started the business, people would say, like, why are you focused on lithium? Like, it's 2% of the battery by mass. It's abundant, it's everywhere. But what we knew, because we came from that industry, was it's not about what's in the earth. It's about what can you make as battery grade materials. And so why would we waste this thing that was so much energy was spent and dollars to get out of the ground? And then at the end of life, from scrap, you can't even get it. And lo and behold, this is now a very important value driver for the business. And that's what people should think about us. We are a sustainable battery materials, domestic producer. And that's really what the business is.
And I guess just delving further into that, is there enough material to process today, and how do you anticipate that changing over time as you're looking at, call it your quantity of feedstock?
Yeah, and this is again a common question, and there's been some other I think pieces out there talking about, oh, maybe there's not enough material. So I'll address this one head on. So look, I think it does vary company to company, but in our case, we have been having to keep up with how many batteries and battery materials we've been receiving to actually process. Why is that? That's what I was getting to with the whole ramp that it took to actually get here over 4 or 5 years before this. It takes time, right? It takes time to qualify with groups like LG, gain their trust, go through processes, groups like GM and others, and actually be in a position to take their material. And what they often want to see is they actually have operations where you can send it. And that's a bit of a catch-22, right? So groups that are coming along and saying, hey, looks interesting, I want to get into this. Well, you need to actually have operations be permitted. We're also ISO certified and R2 certified, which is for some electronic waste style derivatives. So there's a bunch of these barriers, right? You want to get going. And we have those things in place. So when opportunities arise, and as they've arisen, we're very well positioned to take them. And a large part of what we've been doing is scrap, as I was talking about. So rejects from making batteries, But also, this is probably not as obvious for most people. When you read about recalls, and they're not good for the industry net, but they happen and they need to be dealt with. So recalls meaning, full swath of vehicles have been recalled back to the dealerships to have the batteries replaced. We've dealt with a lot of those. Those are a lot of battery packs at one time. And also, again, this may not be super intuitive because it does come to mind, but also energy storage. There's tremendous growth in the energy storage business, meaning stationary energy storage, residential utility. And some of those projects are actually getting a little old. They're about 5-6 years old, maybe more. So maybe they need to be changed out. Or there have been accidents where things have unfortunately caught on fire, or there have been recalls associated with those. So that's all been a total, boon, I'd say, in terms of a stack of material coming to the business. And we've benefited from that. And that's the virtuous cycle you want to be in. But I'm getting to also from a competitive perspective, just to close it out, if somebody were to come along today and say, hey, that sounds great, I want to do it, there are all those barriers that I just mentioned that are in the way. How to set up a facility, get it permitted, get it certified, get the relationships with the OEMs, be there at the right time, et cetera, et cetera. So we're in a great position as we continue to move forward.
So I've received several questions from the audience, but most of them pertain to the recently passed Inflation Reduction Act and other government funding. So we'll put them all into this final question, which is, in light of yesterday's DOE announcement and of battery grant awards, I guess, how do all these different bills work together? Do you expect that LICY might receive any funding? What's your viewpoint on, call it, public funding for the industry moving forward? And I think that nicely encapsulates all the questions we've received.
Totally. And this is a topic du jour, right? So very exciting, very encouraging what the administration's gone out and stepped out to do. Look, I would just say, and I'm going to dissect this a bit for our business, but I would just say as a headline, this is just the beginning. There is a whole stack of, between the Inflation Reduction Act, the bipartisan infrastructure law, and also the DoD related funding. There are a lot of different programs. They're in the beginning innings here of getting the dollars and actually administrating those programs. And I'd sum it up for us as LiCycle to say, there's both direct and indirect benefits that are potential here. So let me first dissect maybe some of the direct, and I'll talk about the indirect. So on the direct side, one of the things that was actually, I think, missed, and some people picked it up, one of the biggest dollar allocations out of the IRA was actually to the Loan Programs Office, to the LPO. So an additional $250 billion in clean energy loans for the Loan Programs Office. They already had about circa $44 billion under their existing mandate. And this is adding on top of that to go towards, clean energy transition projects. These are loans. And there's a lot of public info about that out there on the LPO website, so folks can go look at that. But their whole role here is to help enable. Right? So it's to help enable additional private investment, or maybe where there's businesses that are already commercial, to really help augment. So that's one. Also on the direct side, there are tax credits. So there's a 10% tax credit associated with critical material production, lithium, nickel, cobalt. So they're still in the process of figuring out how to implement it through the Treasury Department, but we're probably straight down the fairway there, depending on the final details. So that's exciting, and also 30% investment tax credit for clean energy facilities. That one was a bit of a lower dollar amount, so we'll see how that gets distributed. But it's also there, and potentially we're eligible for that. So those are some of the direct, dollar potential impacts. On the indirect side, and I'll tell you what we're seeing from our customers. They all of a sudden do the IRA, and it was already happening, but all of a sudden with added momentum have had to figure out how they're going to get domestic sourcing because of the clean vehicle tax credit. So the $7,500 that is stipulating a growing domestic supply requirement over time. That has been a very big deal for a lot of different groups. And if you read the media, you'll see all sorts of companies that are basically trying to figure out very quickly how to do that. So that's a demand adder for us. And we've seen even more interest in the back of that. And again, very quick actions be taken. We were already, interestingly, very well positioned through our existing strategic partnerships. We're helping to, enable that, but it also creates additional potential growth and demand for us. So, I can't specifically comment on what we're pursuing, not pursuing, but I would just sum it up to say, this is just a start. We have that funnel slide that I very briefly flashed up on the screen, and that's on our website. Just on the grants, lastly, that's maybe where the questions were going. I'll close out with that. So there were a series of grants that were announced yesterday. And these were the first batch of grants under a certain tranche, $2.8 billion that was initially dispersed. So there was one recycling grant as part of that. One of the interesting nuances of this is you cannot stack both a grant and a loan for the same project. So you can do either or. And that makes sense because I guess what they don't want is you funding a loan out of a grant, which makes sense. So that's just something to keep in mind. Another thing to keep in mind is our spokes, there were certain capital hurdles. Our spokes are relatively low capital. So they didn't qualify necessarily into that grant program. So really our main focus, of course, is the Rochester hub. Of course, we're funded for that, but this is really about how do we continue to, as I was articulating, get additional potential funding to do the next leg of growth, to open up liquidity and do the next thing. So we're looking at both public, government-related and private related options. These are really, again, for the next leg of what we need. Very exciting vis-a-vis the IRA. Last thing I'll just throw in there, and I'll close it with this. Folks might have picked up that Senator Schumer visited our Rochester hub. That was just a couple of weeks ago. Very supportive, very effusive about bringing, additional potential support domestically. So he kind of outed us there. But that was very exciting. That shows you the momentum behind what we're doing and the recognition. That's public, so people can go take a look at that.
Yes, we saw that. And the Rochester hub remains on time, on schedule for opening?
Yeah, obviously we're inter-period, but I'll just reiterate what we said at Q3, that we're on track for starting commissioning in calendar 2023.
Very exciting. Well, thank you both so much for joining us today. It's been informative. I think it's been a great use of time for our investors. And we look forward to hosting you again in the near future.
Thank you, Brian. Pleasure to be on.
Great. Thank you very much.